that we're looking at, it affects both income statement and the balance sheet. So we need to learn how to do them both at the same time. Because if you're looking at the transactions that are provided here, all the information that is here, we have adjustments and additional information. All these transactions that you can see here and that we use to adjust what? To adjust the income statement, they also affect the balance sheet. So we need to try and see if we can like work on one transaction and then apply it in both income statement and the balance sheet. That's what I want us to try so that we can see that every transaction that is provided, you don't have to do income statement separately and do the balance sheet separately, but you can do both of them at the same time. And then here I have a spreadsheet where we're going to do our workings, starting from the income statement until we do the balance sheet, and we have to do like the notes to the financial statements. It's going to be a long one. It's going to be a long question to do, but I promise you, if we finish this question, even if we're finishing it on Friday, it's still okay. But as soon as we finish this question, we will be okay to go to the question papers and start working on something that we can expect in a test or an exam. Okay, guys, let's start and see how things will go. Here I have my question. So we're going to do example 3. This is Beaver Limited. I will start reading from the beginning, and please guys read with me. Whatever that I'm reading, you also have to read it so that you don't forget along the way. You will understand. You can follow through all the information that is provided in front of us. That is going to help us in terms of like answering the question that is provided. Okay, so here with Beaver Limited, they're saying here Beaver Limited has an authorized share capital of 5,500,000 ordinary shares. So these are ordinary shares that have been authorized. I told you before that authorized shares means that we cannot issue more than the shares that are authorized. We can only issue up until 5.5 million, not beyond that. It's not allowed according to what the Memorandum of Incorporation and also the Companies Act, because since we're doing companies, we are guided by Companies Act. Okay, then we're going to look at what is required. Okay, they're saying here, prepare the income statement for the year ended 31 March 2014. So if our year is ending 31 March 2014, the first question that you need to ask yourself, when is the year starting? Please tell me, guys. 31 March 2014 is the year.
2013.
Please come again.
The 1st of April 2013.
1 April 2013. Yes, exactly. 1 April 2013. That is going to be our the beginning of the year. That is a starting point for you to understand when is your number line starting and when is it ending. Okay. And they want us to prepare the balance sheet at 31 March 2014. So we're going to write down all the balances that we have from the balance sheet, and then prepare the notes to the financial statements for the year ended 31 March 2014. I have few notes that are, for me, I believe they're important, but others, they're useless. We don't have to work on them. I will be pointing out those that I want you guys to know it's a must. But some other notes, we don't have to stress about those ones. But all the important ones we have to work on. Information, they're saying here, list of balances on 31 March 2014, the end of the financial year. So they provided us here with some balances at the end of the year, but some of them may not have been adjusted. So we need to process those adjustments before we can do the income statement, before we can do the balance sheet. Balance sheet account section, we have ordinary share capital here, 2.8 million. I don't know whether this is the end or the beginning, but the additional information will tell us. Retained income, 1 April, they're telling us here that this is a retained income at the beginning, 950,000. Equipment at cost, 800,000 rands. Vehicles at cost, 570,000 rands. Accumulated depreciation 1 March 2013, which means this is accumulated depreciation at the beginning. Accumulated depreciation on vehicles at the beginning, 160,000. Trading stock, 325,000 rands. You remember that when we're dealing with trading stock, sometimes they tell us that there was a physical stock taking that took place at the end of the year, and they give us the balances that we will have to compare with this one, and we decide whether we're having a trading stock deficit or a surplus. Debtors control, you know exactly when we're dealing with debtors control. When do we use this balance of debtors control here? Provision for bad debts adjustment and all of those things. It is related to this one. Provision for bad debts at the beginning of the year. You will remember that there is an adjustment that we're doing on this balance. These are all the things that you must think about whenever you're going through your trial balance. Bank, you know that it affects your balance sheets, cash and cash equivalents. Cash float is something like petty cash for me. It also affects your balance sheet as part of cash and cash equivalents. Creditors control. This one is for balance sheet. It will be recorded in the balance sheet, so it has to go to note number 9 for trade and other payables. South African Revenue Service income tax. It depends. You can see here we have a balance, a debit balance of 280,000. If we have a debit balance of income tax, SARS income tax, debit balance, it means that SARS is owing us. Then we have to record it as an asset. So which means it is going to be part of trade and other receivable. That is note number 5. Those are the things that we need to think about while we're going through our trial balance. Mortgage loan, bank, London Bank, 399,200. That's the amount we owing them. That's why you can see it's on the credit balance. We're just going to look at the additional information and see what else they provided us there. Nominal account section. We have sales here, 5,680,000. This one goes to income statement. Cost of sales, 2,380,000. Debtors allowances, 47,000. Rent income, 192,850. Salaries and wages, 1,450,000. Pension contributions, which means this is a contribution by an employer, 82,500. Okay, medical aid contribution, 54,000 rands. It is a contribution by an employer as well. Bad debts, 32,500. These are the debtors that were unable to pay their accounts and we had to write them off during the current financial year. Rates and municipal services, 125,000. This is a business expense that has to be paid to the municipality. Packing materials, 8,600. Telephone, 52,000. Stationery, we have 6,400 rands. Bank charges, we have 19,600 rands. Directors' fees, we have 900,000 rands. Audit fees, we have 48,000 rands. Dividends on ordinary shares, we have 250,000 rands. And we need to talk about these dividends that they usually give you on the trial balance. These dividends, we record them as interim dividends. These are interim dividends that were declared and paid during the year. They were declared and paid during the year. So they will go to note number 8, which is the one of retained income. Commission income, 456,000. This is an income statement. Then we have our totals provided there. Then now we go straight to where? We go straight to the adjustments and additional information. Adjustments and additional information. So guys, transaction by transaction, we do income statement and balance sheet at the same time, because each of these transactions that you can see here, they affect both income statement and the balance sheet. So we need to do it simultaneously. Okay, we're going to work with number 1 first. They're saying here, total of inventories according to physical stock taking on 31 March 2014. This is the year end. We found out that we have a trading stock of 318,000 rands and we have packing materials of 650 rands. At year end, these are the closing balances based on the physical stock taking. What is a physical stock taking? That's when we go to the warehouse physically and count the stock with our hands, right? And count the stock physically. It's not the one that comes from accounting records, but it is the one that is counted physically. So we found out that we have a trading stock of how much? 318,000 rands. Okay, and if we go to our trial balance, how much trading stock we have there? If we go to our trial balance, how much trading stock we have there? Let's see. They gave us a trading stock of 325,000 rands. 325,000 rand. This is as per our accounting records. They're showing that at the end of the year, we have a trading stock of 325,000 rands. But looking at the one that was counted at the end is only 318,000. You can see now that we have a stock loss here. We have a trading stock deficit, 325,000 minus 318,000 rands. That is going to affect our income statement. So I'll go to my expenses, operating expenses, and check if I have my trading stock deficits there. So what am I going to do? I'll say 325,000 rands minus how much do I have on my transactions? I have 318,000 rands. So I will say 325 minus 318,000 rands. So this will be my trading stock deficit. Why am I saying that? Is because the stock that has been recorded in our books is higher than the one that we actually have. So which means it's possible that along the way there was a stock that was stolen or it was damaged. We don't know, but we lost a trading stock, which is a difference between the two. So how much? 325 minus 318.
7,000.
We're getting 7,000 rands. Yes, we're getting the 7,000 rands. So we have a stock loss of 7,000 rands, which means we don't know how we lost it, but it's possible that it was damaged, it was stolen, or stock that has been expired and all of those things. Okay. This is a bad accounting then. It's a very bad accounting. Very bad accounting because we can't be recording 325,000 in our books, but we actually have 318. So if you're an accountant and you're finding this issue, there's a problem with you. Because which means you don't keep proper accounting records daily, because accounting is done daily so that you can be able to identify whatever that is being lost. But sometimes it's impossible because when we do our trading stock count once at year end, we can only identify these things at year end because the accountant is only sitting at the office. Those who are working at the warehouse, they won't even be able to identify this issue because they're only counting it once at the end. Packing material, 650,000. This is the packing material that we have at the end of the year. But if we go and look at what is there on the, what is sitting on the trial balance, how much packing materials we have there, we can see that we have a packing materials of 8,600. This packing material is the one that was used is the one that was purchased, sorry. Packing material of 8,600 was purchased during the year. But how much we left with? 8,600 was purchased and we left with 650 at year end. So which means now there is that packing material that was used during the year, which is going to be a difference between 8.6 and 650. So I'll go to my packing materials. Where is it sitting in my income statement? And then what am I going to do there? I'll say 8,650. How much I have there? No, sorry, it's 8,600. And then I say minus the 650 that I have in my books. That is 650 that you guys can see here. And then how much am I getting as a difference, which is the packing material that was used?
7,950.
7,950. Okay. And then now we've dealt with the transaction in terms of income statement, but how does it affect the balance sheet? We need to also record this transaction in the balance sheet. We can see here they gave us the closing balances, which is a trading stock at year end, 318,000, packing material, which is 650,000. We do have a note for this one, but it is a note that is not important for me. I didn't even show it here. It is note number 4. For me, that one is not that important. So we just need to go and put these amounts in our balance sheet. They fall under inventory, which is note number 4. So under inventory, I need to show my trading stock of 318,000. This is the one I will be recording in the balance sheet because that is the physical stock that was counted at year end. That is the stock that is existing at year end. We are sure of that because we have counted it physically. So I have 318,000 plus 650 of packing material. That will be my trading stock. Okay, 318,000 plus 650. So how much am I going to get here as part of my closing stock? How much am I going to get?
$317,350. Wait.
317,000.
Yeah,
318,000.
318,650. Yes, thank you on that. 318,650. Okay, so you guys can see how we work on the transaction. We go to the income statement. After that, we check it on the balance sheet. You can see this is one transaction. We have dealt with it in terms of income statement, and then we have dealt with it in terms of balance sheet. At the same time, before I move to transaction number 2, I'm done with transaction number 1. I know that I'm done with it and I'm happy with it. Then I can move on to transaction number 2. What is transaction number 2 saying? They're saying here, rent for April 2014 has been received in advance, right? The rent was increased by 10% with effect from 1 February 2014. So this is the transaction that is going to affect income statement, and it is also going to affect what? A balance sheet. So let's work on it in both scenarios. Let's start with the income statement. What do I need to do? Kinelwe, this is yours.
Go to the
Yes.
Go to the balance sheet.
Balance sheet. Okay. Must I go to the trial balance? You mean the trial balance?
Yeah, sorry.
Okay.
And then you write down.
Yes.
You write down 192,850.
192,850 years, which is the okay, so which means this we're going to do some workings for this one now.
Yeah.
Okay, let me do that here. I'll say workings here, and then I'll start with the first one. So number 1. So what am I'm going to write down how much? 192,850, right? Okay, and then
can you go back to the what you call it?
balance transaction, yeah.
Yeah. Then you're going to work out the months you received 10%. Can I have 110 times 3?
110 times 3, okay. So I'll say 110 times 3 years.
And then for 10 months, you received it at 100%.
So I'll say 100 times 10, yeah?
Yeah.
Okay.
And then you're going to say 192,000 times, 992,850 times the total of 110 times 3 plus 100. Wait, let me work it out.
110 times 3, how much you getting?
330.
330, yeah, okay. And then the other one?
1,000.
Okay, 1,000. Eh? Okay, so how much in total?
1,330.
Okay, then what do I do after this one?
You're going to multiply 192,850
Yes.
times 110 over 1,330.
1,078, right?
And then you get the rent for April.
The rent for April, how much is it?
$15,950.
15,950. Yes. Then what do I do with this 15,950?
You're going to subtract it from rent, the total. Going to subtract it from 192,850.
Yeah, so I'll go to my income statement and say 192,850, right? 192,850 minus
15,950.
Yes, and how much are you getting?
$176,900.
And 76,900. Okay, thank you. And then this is income statement. What about balance sheet?
Balance sheet, you're going to take it to trade and other payables.
Trade and other payables, right?
Yeah.
On the note, that is note number 9, yeah? So where am I going to record it here?
Income received in advance.
Okay, income received in advance, and how much am I going to record?
15,950.
15,950. Yes, very good on that. This is how we deal with the transaction. Can you guys see how you do the one transaction? It affects both the income statement and the balance sheet. You need to deal with one transaction in both scenarios, and then you move on. You know very well, Umuti, once we're done with our rent, these two transactions, we're done with them. We will not come back to them again, which means now the moment I reach my last transaction, which is number 12, I'm done with income statement, I'm done with balance sheet. I close everything, I balance my balance sheet, I get the net profit on the income statement, I close my notes, I put the amount on the balance sheet, then I'm done. I don't want you to go through all the transaction and do income statement. And then after that, you go through all the transactions again and you do the balance sheet. That's not the way of doing it. That's not the way of doing it. One transaction, you must treat it in both scenarios, income statement and balance sheet. Very good, Kinelo, on this one. Let's go. Number 3. So now we're going to look at number 3 and see how we're going to deal with transaction number 3. Very simple and straightforward. Okay. Number 3, they're saying here, rates and municipal services include an amount of 7,200 paid for the period 1 February 2014 to 30 April 2014. This one is for you, Smanga. What do I do here?
We go look at the trial balance.
Trial balance, yes.
Yeah. Okay. Okay, the 125,000. We're gonna say 125,000 plus the amount from the 7,500.
Okay, so I say 125,000.
Yeah, plus 7,500.
Plus 7,500.
Wait, was it 7,500? May we go back to the transaction?
Let's go back. Let's go back. There is it here.
Oh yeah, 7,200.
7,200.
Yeah, that's all.
Okay. And then
Yeah, that's all. We get the amounts and then we put it in the income statement.
how much we're getting?
132,200.
So this is the amount for income statement.
Yeah.
Okay, I want us to go back to the transaction first and look at something, Smanga here. I want us to read the transaction proper. Let's see if what we did here is correct. I don't want to disagree with you, but I want us to go through the transaction and see if what we did is correct. They're saying here, rates and municipal services include an amount of 7,200 paid for the period of February 2014 to 30 April 2014. Is 30 April part of our accounting period? April 2014, is it part of our accounting period? Do we have to include the full amount of 7,200 here? Because this amount is already included. So why are we adding it back here? Because now I see you're saying we must add 7,200. But they told us that already that 7,200 is included. They said rates and municipal services include an amount of 7,200, which means it is already there on that 125,000 rand. But now why are we adding it for the second time? Are we not double counting? Does it make sense what I'm saying, what I'm trying to say here?
Yeah, it makes sense.
Yes. Now, are we not supposed to exclude the amount of April 2014? Because April 2014 is outside our accounting period. If you look here, we said our accounting period ends on the 31st of March 2014. So anything that says April 2014 is outside, is here outside our accounting period. It is outside. Are we not from that 7,200? They say there is an amount of April 2014. Are we not supposed to exclude it from that 7,200 and deduct it from 125? Let's start it afresh. Yeah? So my starting point here is to calculate how many months first. From 1 February 2014 to 30 April, how many months? Because I know very well that February 2014 is within my accounting period. March 2014 is within my accounting period. But April is outside. So this 7,200 is for 3 months. Am I right if I'm saying 7.2 is for 3 months? Because they're saying here, rates and municipal services include an amount of 7,200 paid for the period 1 February 2014 to 30 April 2014. So which means now I have February, March, April. I have 3 months here, but from these 3 months, 1 month is outside our accounting period, which means it is like a prepaid expense which has to be excluded. So my starting point here is to say 7,200 divided by 7,200 divided by 3. How much am I getting? 7,200 divided by 3. What do you get on your side?
2,400.
2,400, yes, 2,400. So which means now per month it was 2,400. But I know very well that from these 3 months, there is April, that it should not be part of our accounting period. Matching principle, it is outside. So I need to exclude it because this 7,200 is already included in this 125,000 that I can see here. Where is that? There is 125,000. Rate and municipal services of 125,000. It includes 7,200, and that 7,200 we can see that it has an extra month, which is April 2014. So which means this extra month is equivalent to 2,000, 2,400. So what I need to do now is to say 125,000 rands minus the 2,400, which means now how much am I going to get here? 125,000 minus 2,400. How much are we getting?
122,600.
122,600. So which means now this is the amount that should be recorded in the income statement. 122,600. I need to go to rates and municipal services and put my workings, which is going to be 125,000 minus 2,400. I'm going to record it here. And then my total will be 122,600. This is the amount that is supposed to be in the income statement. Do you agree with me?
Yes.
Okay. Kinelwe, do you agree with us?
Yes.
Are you sure you're agreeing with us?
Wait.
What did we get?
Can you go back to the transaction again?
Does it make sense on your side? Because I want us to understand here. I don't want us to rush on something, but we don't understand.
But Concha, what was the month end?
Yes, please come again.
What was the month end? The year of the end of the financial period.
Financial year end is 31 March 2014.
Okay, yeah. Can you go back?
Yes.
That's where the 3 months is coming from. Oh, I see. Yeah, I understand it.
Following it, yeah, that's good.
Yeah.
And that's good. So actually that 7.2 was for 3 months. So, but in that 3 months, there was an extra 1 month there. That's why we're taking it out. 2.4 is a prepaid expense. So now that we have recorded 122,600 as part of like the expense in the income statement, but I know that this 2,400 is a receivable, right? It is what? It is a prepaid expense that is part of receivables. 2,400. It's supposed to go to my note number 5 as part of what? Prepaid expenses, right? Prepaid expenses, and then I'll say 2,400. Am I right here by doing this? Because I paid extra 2,400. I'm supposed to pay it next year. I paid it before receiving the service. So which means now that is going to be trade receivable now, trade and other receivable, part of trade and other receivables. I have to go and record it in the balance sheet as part of what? My trade and other receivable. I have prepaid expense here, which is 2,400 rands. Okay. I hope you guys are following. Then we're done with this transaction now. We're done with this transaction. Now we move on to number 4. Number 4, they're saying here, debt to be written off as per director's approval. Debt to be written off as per director's approval. It's 5,000 rand. So this is an additional debt that has to be written off. So which means now I'll go to my bad debt that is sitting in there in the income statement. How much bad debt? Okay, I need to go to my trial balance first. How much bad debts that I have there, and I need to add 5,000 there. So the bad debts, I have 32,500 rands, and then I'll need to say 32,500 rands plus 5,000 rands. Okay, and then how much am I going to get here? That is going to be 37,500 rands. This is my bad debt. Okay, for income statement, right? This is for income statement. And also, since now we have this as part of what? As part of the income statement, but how is this going to affect my balance sheet? Because the additional bad debt that has to be written off of 5,000, I need to go to my trade and other receivables, right? My trade and other receivables note. Let me go to that note so that we can see how is this affected. Trade and other receivables note, as you guys can see here, we have trade debtors here. We have trade debtors, less provision for bad debt. So my trade debtors, I need to subtract that 5,000 for additional bad debt. But firstly, I need to get my debtors control in my trial balance. How much is my debtors control there? Debtors control, I have 245,000 rands. This is my debtors control, 245,000 rands. Then I'm going to subtract 245,000, and then I need to say minus that 5,000 rands, because we're saying the transaction is affecting both income statement and the balance sheet. So this 5,000 rand that I've added here as part of bad debt, I need to go and subtract it from my debtors, from which is a debtors control. So I need to go to my note and say minus 5,000 rands here. And then how much am I going to get as part of my trade debtors? 245,000 minus 5,000, I'm going to get 240,000 rands. Are you guys happy with this one? This is our trade debtors. You must always take out the bad debts that have been written off. Then now you go to your next transaction. This is number 4. We have dealt with it in both income statement and the balance sheet. Now they're saying here, adjust the provision for bad debts to 4% of the book of the good book debt. So which means now I need to do this adjustment. Number 1, it is going to affect the income statement provision for bad debts adjustment. Number 2, it is going to affect what? It is going to affect the income statement. This one, I want us to do it in terms of balance sheet first. Provision for bad debts adjustment that we have in our balance sheet, 1 April 2013, which is the beginning. 1 April 2013, we have 9,400. This is my provision for bad debts adjustment. So I'll go to my note number 5 and say 9,400, right? 9,400, because that's the amount that I have here. But now, because I'm going to do the adjustment based on these receivables that I've excluded bad debt on. So I'll take my 240,000 and I multiply it by how many percent did they tell us about there? They said 40%. We need to adjust the provision for bad debt to 40% of what? To 40% of the good book debt. Sorry, not 40%, but 4%. So now I'll go to my workings. I'll go to my workings here, and then I have my working number 3. So the debts that I have, remember, I take my debtors control. I said I will take my debtors control, which is going to be how much? Debtors control that I have there, 245,000. So my workings will say 245,000. Then I said I'm going to subtract the additional bad debts written off, which is 5,000. I'll say minus 5,000. And then how much am I going to get it there? I got 240,000 as my book debt. These 240,000, I need to multiply it by 4% because I'm adjusting it to 4% of my book debt. The reason why we're saying this is a book debt is after we have subtracted the bad debts, the additional bad debts written off. So if I say 240,000 minus 4, multiplied by 4%, how much am I getting? 240,000 multiplied by 4%, how much are we getting?
$9,600.
9,600 rands, 9,600 rands. So which means now I'm adjusting the provision for bad debt adjustment to 9,600 rands. Let's go and check how much we have in our trial balance. We're having 9,400 rands there. We're having 9,400 rands. So we have to increase it to 9,600. So which means now I'm going to say 9,600 minus 9,400. And then how much am I going to get here? I'm going to get the 200 rands, right? I'm going to get the 200 rands. This is a provision for bad debt adjustment, which is 9,200 rands. So on my income statement, this is an expense because I'm increasing it from 9.4 to 9.6. So I need to go and have what? Provision for bad debt adjustment as part of what? As part of my expenses in the income statement. So I'll say here, provision for bad debt adjustment. Okay. And then I'm going to have how much? I'm going to have 200 here. But I need to show my workings, obviously. These are the workings I'm going to show. 9,600 minus 9,400. Okay. minus 9,400, and then I'm getting the 200 rands. Okay, but also these 200 rands, because remember I had 9,400 there. I had 9,400 in my note. In my note, I had 9,400. So I need to go and say plus 200 rands there, which is I need to say go and say plus 200 rands there, because I'm adjusting it from 9,400 to 9,600. So here I'll say minus 9,600. This is my trade data as less provision for bad debt. And then we're getting what? We're getting the net trade data. So which means now I'm going to take the difference between the two, which is going to give me 230,400 rand. So this is what I have currently on the note. This is how my note look like so far. This is how my notes look like so far. My notes for trade in other receivables, which means now after doing this, I'm done with my transaction number 4. This one is done. Transaction number 4, this one is done. No, transaction number 5. Now I'm going to transaction number 6. Are you guys happy with how we have dealt with this transaction number 4 and 5? Are you happy with that? It affects both. Affects bad debt, provision for bad debt. It affects debtors control. Any questions on this one? I will help you with this one or following it. How are you feeling about it, Smanga, on your side?
Yeah, I'm good for now.
Good for now. You'll need to practice it more. Kinelwe, how are you feeling about this one?
I think I also need to practice it more.
Yes, because it will be like it's complex when you're dealing it with, like you see now we're doing it like simultaneous. We do the income statement, you do the balance sheet at the same time. This is the strategy that you guys need to learn. It will help you a lot, because the reason why I don't want to do it separately is because you will treat the balance sheet the same way as income statement. No, like how you treat the transaction on the income statement, you'll do it the same way on the balance sheet, which is wrong now. You will remember our slides. What we did when we met on Monday, we said that don't confuse the two. Don't mix income statement items to balance sheet. We don't do that. So that's why we need to be careful here. On the note, we said 245 minus 5,000, and then we got 240. But this 5,000, we added it on the bad debts there, if you remember. And then here we're saying 9,400 plus 200, you're getting 9,600. But on the income statement, we said 94 minus 96, we got 200 there as part of our provision for bad adjustment. You can see here we have 200 that we have here. There is 200. But that side we have 96. And then for bad debt, we added 5,000 here. That side we said minus 5,000. So we need to be careful on those things. They don't have to confuse us. Number 6, the telephone account for March 2014, 1,800 was still outstanding. What do we do with this one, Smanga? How we deal with this one?
We will add 1,800 to the amount that's on the trial balance.
Exactly, very good, because it is still outstanding. This is a telephone account. It is still outstanding for March 2014, 1,800 was still outstanding. So the amount that is sitting on the trial balance, how much is it? Let's go and see. For the telephone, we have 50. I'll go to my income statement telephone, and then I'll say 52,000 rands. I need to say plus, because that was 1,800. There was outstanding, right? There was, so which means now I'm going to end up having 53,800. Okay, that's how we deal with the transaction. But now, when it comes to the balance sheet, how do we deal with this transaction? Take us to the balance sheet now.
When we go to the balance sheet itself.
Yes, please come again.
May we go to the balance sheet?
Okay.
I wanna see. Um,
You see, before we go to the balance sheet, I want to ask you something here, Smanga. What kind is this? Is an accrual. We spoke about accruals on Monday. What kind of an accrual is this?
accrued expense.
This is an accrued expense, ne? Why are you saying that?
It's
Why
okay. Is an amount to be paid? Like
yes, because
then
we're owing it. You're correct. It's an accrued expense because we're owing it at year end, right? It was still outstanding, right? We're owing a telephone account. So since we're owing, is it an asset or a liability?
it's a liability.
So where does it fall? Trade and other receivables or trade and other payables?
Payables.
What? Come again?
Trade and other payables.
Exactly. Trade and other payables. 1,800 will need to go to note number 9 for trade and other payables. You can see there, trade and other payables are in note number 9. There is accrued expenses here. Accrued expenses or expenses payable, 1,800 needs to go there. Can you see? It's part of like trade and other payables. We're still putting it in the note, but once we're done with the note, we're going to get the total and put it on the balance sheet because we do have trade and other payables on the balance sheet. It's there. I'm still going to put it here as a total now, but in the meantime, I need to put it in the note, as you can see here, where the rent received in advance and then this. We're still going to finish the note and then we're going to put it on the face of the balance sheet, but for now it doesn't go there. Thank you. On note number 6, on transaction number 6, I think we're done with that one. Now we move on to transaction number 7. Provide for depreciation as follows: on equipment 10% per annum on cost, on vehicles 15% per annum on diminishing balance method. Note, a new vehicle costing 160,000 was purchased on 1 October 2013. This has been properly recorded. This is for you, Kinele. What is our starting point here?
We'll start with equipment.
We're gonna start with equipment, nah?
Yeah.
Okay, so what do we do with equipment?
We go to the trial balance.
We're gonna go to the trial balance. Okay, let's go to the trial balance and see. Let's go to the trial balance and see. Yes.
You're gonna multiply 450,000 by 10%.
450,000 by 10%. Okay. Let's see. 450,000. This is 10%. The cost price, ne?
Yeah.
Okay. So we need to do workings for this one, ne? So I'll go to number 4. Okay, so I want us to split it first. Which one are we starting? Is this an equipment that is old or unsold, or what is happening here?
I think it's just old equipment.
We're just doing like the one for all equipment. They said 10% on cost. Okay. So we say you said I'm going to say 450,000, yeah?
Yeah.
Okay, 450,000. Okay, for 50,000 times 10%, nah? Am I right on
Yeah.
this one? Okay, and then how much we're getting?
45,000.
It's gonna be 45,000 rands, eh? So this is our depreciation for equipment. This is our depreciation for equipment. Okay, let me just say here depreciation, equipment. Okay, and then what happens? What is next?
We're going to start with the new vehicle.
A new vehicle that was purchased. What they're saying here, they're saying a new vehicle costing 160,000 was purchased on 1 October 2013. This has been properly recorded. Okay, what do I do with this new one?
You say 160,000 times 15%.
160,000 times 15%. So I'll say here a new vehicle, right? New vehicle. And then I'll say 160,000 times 15%. Nah?
Times times 6/12.
Multiplied by 6/12 because we're starting to count from 1 October 2013. So it's going to be October, November, December, January, February, March. That is 6/12. So I'll say times 6/12. Okay. And then how much am I getting?
$12,000.
12,000 rands. Okay. 12,000 rand. Okay. So this is depreciation for new vehicle.
Now
Okay.
we're going to do the old one.
Now going to do the old vehicle. Okay, so let me just say here old vehicle. Okay, then what do we do with the old vehicle?
We go to the trial balance.
Trial balance, yes.
And then we say 570,000.
570,000, yes.
Can you go to the transaction again?
Okay, let's go to the transaction again.
I think we have to subtract 1,160,000
We need
from
to
the,
subtract, yes.
and then we also subtract the accumulated depreciation.
So we're going to say minus 160,000 first. Why are we saying minus 160,000?
Because it said this has properly been recorded.
And we've already calculated depreciation for that. So we need to take it out.
Yeah.
160,000 rand, and then how much you're going to get first before you even subtract the accumulated, how much we're getting here. Sorry, this is 160.
You get 410,000.
410,000 rands, right?
Yeah.
And then what do we do now? We're saying minus again, eh?
Yeah, and then we're going to go to the trial balance.
Yes.
We're going to take the accumulated depreciation on vehicles.
Yeah,
Can I
which is
say minus?
160.
Yeah.
Minus 160,000. Okay, we're subtracting another 160,000, and then how much we're getting?
We're getting 250,000.
Again, the 250,000. Okay. And then
Then you multiply it by 15%.
multiply by 15%. And then how much we're getting?
37,500.
37,500 rands. Yes. 37,500 rand. So this is a depreciation for the old vehicle. Anything else in terms of depreciation that we still need to do?
Okay.
There's nothing else.
Yeah.
Nothing was sold here. There's nothing that was sold. So which means our depreciations, we're going to have 45,000 plus the 12,000, and then plus the 37,500 rand. So this is the depreciation that I need to record in my. This is the depreciation that I need to record in my books. So I'll say 45,000 plus 12,000 plus 12,000, and then I say plus 37,500 rands. Okay, 37,500 rands. And then how much am I getting in total?
94,500.
94,500 rands. Okay. This is 94,500 rands. This is how we do the depreciation. Very good on that. Smang, are you following how this is done? How was the depreciation calculated?
Yes, I'm following.
Perfect, perfect, perfect. Then now the same transaction, we need to deal with it in a balance sheet format. So which means now we need to go and do what we call a fixed asset note, right? We need to go and do the fixed asset note. Let's go and see. Let's go and see if we can do it. All right. So here we have the balance sheet, right? So we have land, which consists of land and buildings. It has vehicles, it has equipment, and we're having what? We're having the total here. So I want us to deal with. Do we have land and buildings here? Let's go and see if we have land and buildings in our trial balance. If you see here, we have land and buildings at cost, which is 800,000 rand. So which means now I'll go to my land and buildings and put the cost here of 800,000 rands. Do we have accumulated depreciation on the land and buildings? That is going to be 0, right? And then now my carrying value at the beginning, it is going to be what? It is going to be the 800,000 rands. Then I need to subtract what? I need to subtract my accumulated depreciation, and I will still getting the same 800,000 rands. Then additions. Do we have any additions? Do we have any additions at cost? Which is 0. We didn't buy anything on land and buildings. Disposal, we did not dispose anything. Depreciation, we do not calculate depreciation on land and buildings. Then which means now I'm going to have the same cost at the end, which is going to be 800,000 rands, and then minus accumulated depreciation. So which means that is going to be 0. Then now my carrying value at the end, it is going to be cost minus accumulated depreciation, which is going to be 800,000. It remains as 800,000. Okay. Then now let's go to vehicles. What happened under vehicles? We know very well that a new vehicle costing 160,000 was purchased. So which means now I'm going to have additions of 160,000 rands, right? I'm going to have additions of 160,000 rands. And then what about depreciation for vehicles? I calculated disposal. We did not dispose anything. We're going to have 0. Less depreciation. We did calculate depreciation for vehicles. How much do we have as part of our depreciation for vehicles? We calculated the new, which is 12,000, plus the old, which is 37,500. How much is the total? How much is our total? 12,000 plus 37,500.
49,500.
49,500 rand. So that is going to be our depreciation for vehicles. So I'm going to say minus 49,500 rand. Okay. And then now let's deal with the cost price. We do have the cost price here. They gave us even the accumulated depreciation at the beginning. They did give us for vehicles. We do have it here. Accumulated depreciation on 1 April 2013, 230,000. That is the accumulated depreciation. I'll say minus 230,000 rands because this is the accumulated depreciation at the beginning, right? And then what about the cost? The cost price that we have here, we have 570,000, which is the cost. But you must remember that a new vehicle was already added here because that's what they told us, that it has already been recorded. This has been properly recorded. So which means now that is the cost price at that 570,000 is the cost price at the end. So I'm going to record it here as part of my cost price, which means now how much is my cost price at the beginning? 570 minus 160. I think we calculated as 410,000. This is what we calculated it. If I say 570,000 minus 160,000 rands, we're getting 410,000 rands. Then now, how much is my carrying value at the beginning? My carrying value at the beginning is going to be 180,000 rands. My carrying value at the beginning, it is going to be 180,000 rands. And then how much would be my accumulated depreciation at the end? How much do we have? Kinelwe, how are we going to get that one?
You're going to take the depreciation for the less accumulated depreciation, and then you're gonna add depreciation, less depreciation to get accumulated depreciation.
Exactly. Accumulated depreciation at the end is equal to accumulated at the beginning plus plus the depreciation, because we don't have a disposal. So it's going to be 230,000 plus 49,500. How much we're getting? $230,000 plus 49,500. How much we're getting?
279,500.
279,500 rands. That is my accumulated depreciation at the end. And then my carrying value is going to be 290,500 rands. That is my carrying value. And then now we're going to equipment. So on the equipment, nothing much happened there. We did not have additions. We did not buy any equipment. We did not sell any equipment unless we have another information down there. We have nothing. So no equipment was sold. There was no disposal. There was no addition. So which means now I'm going to have 0 under additions. I'm going to have 0 under disposal. In terms of depreciation, how much depreciation we calculated for the equipment? We got 45,000 rands. That was the depreciation that we calculated. So I'm going to say minus 45,000 rands here as part of what? As part of my depreciation. And then now my cost and the accumulated depreciation, my cost at the beginning and accumulated depreciation, definitely I'm going to go to the trial balance and see how much am I getting there. Cost for equipment is 450,000, and since we didn't buy anything, we didn't like sell anything, this will still be the cost at the beginning. So I'm going to have how much here? 450,000 rands, which is the cost at the beginning. And then how much is my accumulated depreciation for equipment is 230,000. They gave us also. So I'm going to have 230,000 rands here. And then now my carrying value at the beginning, I'm going to have 450 minus 230, I'm going to get 220,000 as what is my carrying value at the beginning. Then my cost at the end, how much cost at the end am I going to have? Smanga, this is yours. How much cost we're going to have at the end?
I couldn't hear you.
How much is our cost price at the end? How much will be our cost
Yeah, I
price at the
actually
end?
don't know.
Okay, you see here we have formulas here. Can you see these three formulas? Cost at the end. This is the formula for cost at the end. Can you see here? Cost at the end is equal to cost at the beginning plus additions minus cost of asset disposed. Can you see that? Cost at the beginning, how much is it?
220,000.
The cost price at the beginning, how much is it?
Oh, 450,000.
450,000 rands, okay? Cost at the beginning plus additions at cost. Do we have additions at cost?
No,
So we have 0 here. Minus cost of the asset disposed. Did we dispose anything of equipment?
no, we didn't.
It's 0. So how much is the cost at the end?
Again, 450,000.
Exactly, 450,000 rands. Okay. Accumulated depreciation at the end. There is the formula there. Accumulated depreciation at the end is equal to accumulated depreciation at the beginning minus accumulated depreciation of asset disposed plus depreciation. So how much would be our accumulated depreciation at the end?
$230,000.
No, it can't be 230,000. What is the formula saying?
Accumulated depreciation at the beginning minus accumulated depreciation of asset disposed plus depreciation carrying value at the end.
No, this is the only formula you're looking at. Don't look at the other one. Just look at this one only. Look at that formula only. These are 3 standalone formulas. I want you to get the accumulated depreciation at the end. I want you to get this one using this formula.
It's 230,000.
No, it can't be. Let's do it. Accumulated depreciation at the end is equal to accumulated depreciation at the beginning. How much is accumulated depreciation at the beginning? How much is accumulated depreciation at the beginning?
230,000.
Okay, and then it says minus accumulated depreciation of the asset disposed. Did we dispose any equipment? Nothing was disposed, so it's gonna be 0. Plus depreciation. Do we have depreciation for equipment?
Yeah,
How much is it?
45,000.
How much then? So how much is the accumulated at the end?
275.
275, yes, because we're adding these two, right? 275,000 rand. So which is going to be negative. And then how much would be my carrying value? My carrying value will be 175,000. Then it's a matter of getting the totals, and then this carrying value that will be here. This carrying value that will be here is the one that will go to the balance sheet. So which means now if I can say if I'm taking this total here, let's see. Here I'm going to have 1,200,000, and then I do this here. I add all of this. And then here again, I'm getting my total, which is 160,000. And then what am I doing now? Then I add these, all of them. And then here again, I'm getting my total, which is going to be 1,265,000. And then here I'm going to get the totals as well, which is 1,820,000. So the total that should go to my balance sheet is 1,265,500. 1,265,500 is the amount that must come here. The carrying value at the end. This is the value that is supposed to sit there as part of what? As part of what? As part of your carrying amount, fixed or tangible assets at carrying value is 1,200,000. It comes from note number 3, as you can see that we have done note number 3 there. So how many transactions we have dealt with now? We have dealt up until 7. Transaction number 8, 9, 10, 11, 12. We will finish them when we meet on Friday, guys. But you can work on it on your own first. I want you to carry on working on it on your own. And then on Friday, we're going to do it together. And then we finish it.